How do you get taxed when you receive a 1099 for your income? My name is Jim Martin, CPA, and that's what I'm going to go over in this video. But first, before we dive into how you're getting taxed, let's look at the actual forms, and then we're going to compare it to the W-2. We're going to compare the 1099 NEC, which stands for non-employee compensation, and how does that compare and contrast, more than likely, with the W-2. So many people are used to a W-2. Maybe you've gotten W-2 in the past, and so you're familiar with the W-2. Maybe now you're getting a 1099 for the first time. Well, let's look at the W-2. There's actually 6 boxes on the W-2 that contain your income and related taxes to it. There may be some other lines. If you have state income tax, that'll be on that W-2 as well. There might be some other boxes with some different numbers in there, but I want to focus around what's considered box 1 through 6, and that's going to have your income and all the related expenses. Now there's 3 separate income items that are getting paid through here, and I'll go over them. Boxes 1, 3, and 5, the odd numbers, are going to be the income you earned. Now there's 3 boxes because your income is going to be different for each of these tax types, because there's certain things that can be excluded from different taxes, and there's limits on it. So they have 3 different numbers, and they might be the same, they might all be different. It just depends on your income and what's included. I have a car alarm going off, if you can hear that, sorry. But what's included. And then the even number boxes 2, 4, and 6 are going to be your taxes that have been automatically withheld from your paychecks and paid into the IRS through the company's payroll tax reports. The box 2 is going to be your federal income tax withholding, so that's going to be the amounts withheld and paid towards your federal income tax. And box 4 and 6 is going to be your Social Security, Medicare, what we call FICA taxes. Now the interesting thing on that many of you might not know is that the FICA tax, you're only paying half of that. You're only paying the employee portion. The employer actually pays an equal amount through their employer tax reports that you don't actually see on the W-2. You probably don't see it on your paychecks. You may not even know this was happening, but it is. They're paying half the tax. You're only paying half the tax. Now we contrast that all with the 1099, and if you're getting a 1099, it probably has one number on it, and that's the total amount you've been paid by this employer or whoever issued that 1099. They've just doing or including on their total what you've been paid. There is no tax taken out. They have not taken any tax out. They have not paid any tax out. You are still responsible for all those same taxes that get withheld on the W-2, but now, because they're not taken out on the 1099, you are responsible for paying them all through your personal tax return. Now they want them quarterly. They want advances, estimates, I should say, paid in quarterly, but if you didn't pay them quarterly, you just pay them all through your year-end annual 1040 personal tax return. So now that we kind of contrasted the difference between the W-2 and the 1099, let's dive in a little bit on how this actually works. And let's first, again, give an overview of the W-2, because many of you might be familiar with how that process works. So with the W-2, that number in box 1 is just going to go straight onto box 1 of your 1040. And we're going to add all that up, and let's just keep it simple. W-2 is the only thing you have on your taxes. That's your total income. We're going to subtract out your standard deduction, whatever it might be. That's going to depend on each year. That number changes. And also your filing type, whether you're married, single, head of household, for example. That's going to determine the amount of standard deduction. But that gets to lower your income amount from your W-2 to get ultimately to your taxable income. From there, we use the tax tables or the tax brackets, and we calculate out the amount of total tax you owe. We subtract out, or compare it rather, to your withholdings, box 2 on your W-2. And if you withheld more than the tax you owe, you actually get a refund. If you withheld less than the tax owed, you owe more money on your tax return. So that's a simple W-2 tax, how that works. With the 1099, it is completely different because we've got to calculate out all those taxes and none of it is taken out. Plus, the IRS considers that 1099 income to actually be business income. So now you're going to file as a business, and it requires its own separate form, and that form is called Schedule C. Now, Schedule C is still part of the 1040. It's not a separate filing. It's just an additional schedule in your personal tax return. And that 1040, you're going to report your 1099 income on that Schedule C. But because it's a business and that you have business income, you're also allowed to have business expenses. So that means any expense you've incurred for the purpose of generating that 1099 income, we get to include that on your Schedule C and reduce the amount of income that you're going to ultimately pay taxes on. So we get all those expenses, anything that you can. If you look at this Schedule C itself, if you Googled it, pulled up a form, they list out in the middle section there a bunch of expenses for you, or a bunch, I should say a handful of expenses for you. Typically, always we need that other box that's on there. Page 2 gives you some spots to itemize a few items, but if you need even more than that, we put an additional schedule in the back. Now, I know nobody's going to be doing this by hand. The software is all going to do this. I'm just wanting to go through the mechanics of how this all actually works. Point being, you can have a lot of different expenses other than what's just listed on Schedule C. We can list a lot of expenses out as long as they were incurred for the purpose of generating the income on the 1099. So once you get all that, on page 2 also there's spaces if you're using the simplified method for business use of your car or business use of your home. There's separate forms you would fill out if you're using the actual method on either of those, and that number still comes in and would reduce your income to ultimately at the bottom of page 2 of your Schedule C, you're going to get to a line that's the net profit or loss from your business. And this is going to be what we're going to use to start calculating out all those taxes that we have. Now, there were 3 taxes in there. There's really 2 types here, right? There's their income tax, and then there's what was FICA on the W-2. We call that self-employment on when it's Schedule C income and you're self-employed, we call it self-employed tax. And so there's a separate form that net profit and loss number is going to go over to. It's Schedule SE for self-employed income or self-employed tax. And we're going to take that number over and we're going to calculate out that tax. Now remember on the W-2, I said you're only paying half those FICA tax for Social Security and Medicare. Now that we're self-employed, you're acting as both the employee and the employer. So now you get to pay both sides. So it's about 15%, and this form is going to calculate it all out. Now, if you have W-2 income and you're paying some of these taxes through W-2, it's all factored in here so you're not overpaying, because there's certain limits on the amount of income that's taxed for certain Social Security and everything. So you get down, calculate this out. Ultimately, let's say 1099 is your only income, you don't have W-2, you're going to come down to about 15% of whatever your self-employed income is. And that's going to be your self-employed tax. That's going to flow up to your 1040 in the taxes owed section. And we're just going to put that as a placeholder now, because half of that was as an employer portion. You actually get to deduct that, just like a business gets to deduct the employer portion on the W-2, you get to deduct that on your 1040, the employer portion. So take half of that tax you owe, and we're going to actually lower it on the next section. So just kind of pull it aside. Half the SE tax is actually going to be an additional expense when it comes to calculating the income tax. So now that we've done the self-employment tax, we're going to go back to that profit and loss number, and we're going to pull that, and it's going to go eventually work its way onto the 1040. It goes through other schedules, but for the sake of this conversation, we're going to put it on the 1040 up in the income section. So same section if you have W-2 income, if you have retirement income, dividends, interest, what else might be in there? Other business income, if you might have all that's added together to get to your total income. Then from there, we get to subtract out that half of the self-employment tax. So that's where we lower the business income by the employer portion of the self-employment tax. To lower that down, we also then would apply the same as the W-2, we're applying your standard deduction to further lower down your income to the taxable income number. Once you get the taxable income number, again, just like before, use the tax tables, use the tax brackets, we're going to calculate out the federal income tax. So that's the income tax portion. This would be comparable, if you will, to boxes 1 and 2 of your W-2. And that your total income tax is added to that self-employment tax number we had calculated on that first part, and then we're going to get to the total tax you owe. And just like before, if you have a W-2 or maybe a spouse has this W-2 and has withholdings, we would reduce the total tax by the withholdings. If you did make any of those quarterly estimated tax payments, we would reduce that number again by that. Also, if you have some credits, child credits, things like that, that can reduce the total tax and ultimately get down to how much additional tax you would owe. Or if you've overpaid, maybe you can get a refund off of those taxes as well. So that's the quick overview of it. I do want to note, however, what happens if you get down to that Schedule C, the profit and loss from a business, and you actually have a loss, meaning you had more expenses than you had 1099 income. What happens actually in that scenario? Well, the SC, let's start with that part first. Again, if you have negative or zero employment tax, or employment income, I should say, self-employed income, you don't have to pay any employment tax on that. So none of that SE tax. You can't go below zero on the SE tax. So it just takes you down to zero. You don't get money back. You can't go negative on the SE tax. It just means you don't have to pay any SE tax if you have a loss on your business. Now, for the income tax portion, that negative number still does go all the way to the 1040 in the negative form. You're not limited. So that means if you do have other income, say you have W-2 income of, let's throw some numbers in here for this example, $50,000 of W-2 income, and your profit and loss from your business comes out to negative $10,000, you would still put that negative $10,000 up on the actual 1040, and you would net those down, meaning you would have $40,000 of total income. You didn't have any SE tax to pay, so you don't get that half a SE tax deduction, or, well, you do, half a zero is still zero, but then you get your standard deduction to get down to your taxable income number. So those losses on Schedule C from your 1099 income, if you have more expenses, that can actually benefit you tax-wise. And if you can't utilize it, we can then carry that over to a future year where maybe you can utilize that. So those losses can actually help you, especially if you have other income sources. All right, that was a lot threw at you. Hopefully you could follow through that and understand kind of how 1099 tax works and how that compares to the W-2. If you found this helpful, go ahead and leave a like. If you have questions or want further explanation on any of these points, feel free to leave a comment below. I'll get back to those as soon as I can. And if you want more content like that, or like this, I should say, feel free to subscribe for future videos. Otherwise, thanks for watching, and I'll see you in the next video.